Hey guys, welcome back to my channel, McNallie Money, home of all things stock, investment, and personal finance related. Today we're going to be taking a look at a company that I don't currently hold, but I'm looking to open a position right away here. Before we get into it, please take a second to like and subscribe if you haven't already. And without further ado, let's talk about Opendoor. Hey guys, so as promised, today we're going to be talking about Opendoor Technologies, trades under the ticker symbol OPEN. Had a massive day today, up 14%, closed just north of $31. If we take a look here at market cap, you can see it's sitting at $16.9 billion. And if we zoom out to the 6-month chart, you can see it's just been on an absolute tear all the way up from $10, now north of $30. This is a company I don't currently hold any positions in, but I am looking to open in terms of shares and option contracts. So let's jump right in. Before we get into the actual company analysis, I wanted to take a second and just talk about how Opendoor became a public company. And it actually happened through a SPAC, which is a special purpose acquisition company. And this particular one is headed by Chamath Palihapitiya. And he believes this is the next 10x company, quoting greater homeownership and digitalization of commerce as the main two secular tailwinds for this. Now, he actually purchased Opendoor for $4.8 billion, and this was back in September of last year. In addition to the SPAC deal, they also did what's called a PIPE, so a private investment in public equity, for an additional $600 million. Now, the next thing I want to talk about is actually what Opendoor does and their current business model. So they currently operate in 21 markets nationwide, and we'll talk about why this is important later in the video. So essentially what Opendoor has done is it's overhauled the traditional home selling process. So what you actually do is go to their website, you fill out an online form with details about your house. So some of the things they'll ask for is age, square footage, amenities, stuff like that. And from there, they'll put together a no obligation quote or an offer based on current trends in your area and comparable home prices. Now, if the homeowner is happy with that offer, they can actually accept it online. Opendoor will then do a virtual tour of the house just to ensure that everything matches up with what the homeowner said. If there's any renovations to do, the homeowner can either do them themselves, helped out through Opendoor, or Opendoor will take care of them, and then they will deduct that from the proceeds. Now, the way this company makes money is actually in service fees. So they charge a flat 5% for all transactions, which is actually pretty competitive when you look at other costs associated with traditional real estate firms or brokerages. And we'll talk about that in more detail here. There's actually a slide that breaks this down. Now keep in mind, in return for this 5% service fee, you get a guarantee or a certainty that you'll get an all-cash offer with flexibility and your own timeline, which is massive for this type of industry because a lot of times when people are moving, they have to be out of their home or into their new property by a certain date, and it adds a lot of stress to the whole scenario when you're trying to time it with a third party. In this situation, you're in charge of your own departure date. You don't have to worry about staging, showings, anything like that, negotiations. It's all handled through their website, and it's really user-friendly and stress-free, which a lot of people definitely find important, especially in this type of situation. So if we jump over to the company website, this is essentially how it works. So you can either sell directly to Opendoor, or you can list through Opendoor to another buyer. Now, if you want to sell directly to them, you'll get an instant offer and get paid directly. You don't have to do any showings or repairs unless you wish to, and you'll be able to move on your schedule, which is what we kind of talked about in the last slide there. So these 3 points really differentiate it and really set Opendoor apart from the traditional real estate model and really cater to people's needs in this type of a life-changing event. Now, if you want to list with Opendoor and you don't want to directly sell to them, they'll ensure that you maximize your sale price. You're still going to save on those fees because, as mentioned, it's only 5%. Which is actually cheaper than traditional real estate brokerages at 6%. And then they'll also give you that expertise throughout the buying and selling process, so you can rest assured you're in safe hands. Now, if you scroll down the page, you can actually see customer testimonials, and they have an extremely high customer satisfaction rating. Nearly 90% of customers who sell with them would recommend them to friends. And obviously, this is extremely important as this industry is really just growing now. I think it represents about 1% of total home sales in the United States. So word of mouth in this type of scenario is absolutely massive, especially when you consider selling a home is probably one of your biggest transactions in your life. People want to ensure that it's safe, secure, and trusted. And the best way to do that is word of mouth through either friends or family. So we talked a little bit 2 slides ago about just simplifying the process and selling directly to Opendoor rather than through the traditional real estate avenues. Now, I wanted to really take a second to walk through this because this is the problem that this company is trying to solve. And if you really think about it, most great companies, they start with a problem and they attempt to find a solution or a better solution that's currently out there. So this is how it works currently. When you make the decision to move, you first need to find a real estate agent, which a lot of times can be stressful and time consuming in itself. You then need to repair your property and prep it for sale. Again, as many of you experience, repairs and tradespeople can be difficult to work with and take a lot of time and money out of your budget. Then you need to list the property for sale, so you need to determine a price, make sure that you feel that's a comfortable price, and then list it. After that, you may wish to have an open house so you can get some showings. Then hopefully you receive an offer, which is generally going to be less than what you listed it for. Then you need to go through the negotiation process. Following that, you need a buyer's inspection. Then if they find any issues, you need to negotiate repairs, who's going to do them and who's going to pay for them. After you've done that, you then need to begin looking for where you're going to move to. So you need to search for your new home. Once you've completed your search, you then need to determine which one's ultimately going to be your new property. Now, if any of these steps have taken longer or cost more than you originally thought, you may actually miss out on your dream home because it's either no longer available or out of your price point. And then after all of that's done, you need to wait to close the deal. Speaking from experience, this is honestly one of the most stressful undertakings I've had in my life, and it takes a long time to ensure that each one of these steps is done properly and you're getting the most bang for your buck. Now on the right hand side here, you can see the costs that are associated with all these steps. So there's broker commission, selling commission, closing costs. If you needed to do any renovation or repairs, that's kind of the average $2,500 price point that you're looking at. If you need to carry 2 mortgages throughout the process, obviously there's going to be fees associated with that. You then actually have the moving costs themselves. If you do wish to stage the home for the open house or the showing, obviously that helps sell, but there's additional costs incurred. And then home warranties, home inspections. So overall, you're looking in this example at about $30,000, which compared to the average home price is about 12% of the transaction value. So if you then compare that to Opendoor's rate at 5%, you can quickly see how the savings come into play, not to mention all the time and stress that's also avoided throughout the process. So I think we can all agree now there is definitely a demand or a need for this type of service. And as mentioned previously, this is a very young industry in terms of digital home sales. And I think it's just in the infancy stages and is poised for some big growth. So next up is the leadership team, and if you take a quick glance at this page, it doesn't take long for the big company names to start popping up. You can see here Netflix, Square, Uber, Airbnb, Google, Twitter, Lyft. The leadership team here is extremely deep and they're extremely experienced. The other thing is a lot of the companies they've come from are innovative, up and coming, digital type of companies that are actually changing industries. So if you think of Uber or Lyft, those are reshaping kind of the taxi transportation networks. Netflix obviously overhauled the content experience, and even Square, Capital One, these have really been innovative in terms of the finance or fintech space. So this is honestly probably the number one reason I'm so bullish on this company is just the experience and the diversity this group brings. I think sets them up really nicely to take advantage of this emerging industry. So we've talked about the company itself, the business model, how they became a public company, some of the leaders on the team. Now I wanted to switch gears and talk about the actual numbers behind this company. So as mentioned in the initial slide, they're currently in 21 markets, which is actually relatively small considering the total size of US housing market. But as of right now, they're in 21. They've had a great track record in terms of entering new markets, so that does not seem to be a problem for them. And they've actually served over 80,000 homeowners. So $10 billion in real estate has been sold already. And these graphs actually show the year-over-year growth in both revenue and homes sold. Now, as mentioned, selling your home is a very special experience and it's a big decision in your life. And that's why a lot of people trust realtors, family, friends, whatever the case is with that decision, is because they want to ensure that they have someone to guide them through it and that they're taken care of. And I think that's honestly one of the barriers of entry to this type of company is they need to break that stigma and they need to make people understand that, hey, selling your home online or digitally is just as safe, it's just as comfortable, and you're not going to get taken advantage of. Now, that's obviously hard to do, especially with transaction sizes this big. But the growth in actual home sales shows me that they're starting to chip away at this and they've actually found a formula or strategy that works. So if you look at 2017, they only sold 3,000 homes. Now, that's doubled in 2018, and that's gone up almost threefold in 2019. And every one of these people that successfully sells their home through Opendoor is going to tell their friends, family, and that word of mouth is slowly going to spread throughout the industry. So I see this growth rate expanding exponentially from here as people become more and more comfortable with this type of business model in this type of scenario. So if we scroll down on this page, you guys have heard me talk a lot about TAM or total addressable market. I wanted to show this slide because it's pretty incredible. If you think about some other main industries in the US like autos or food, you can see here autos comes in at 840 billion, food industry is about 1 trillion, which is why I'm so excited about some companies like Beyond Meat, very good food companies, stuff like that. But if you think about real estate, it honestly doesn't get much bigger than that. Real estate represents $1.6 trillion a year in the US alone, which equates to 5 million homes being sold annually. So if you look up here and you say, okay, well, they're selling about 19,000 homes right now out of a total of 5 million, you can see how massive this opportunity is and how much upside there truly is in this industry. Towards the end of the video, we're going to talk about some of the competitors in this space, but I wanted to highlight this because I honestly think this pie is big enough that there's enough to go around, and even if there are some strong competitors in this space, I think there's opportunity for many companies to make a lot of money here. So this slide here actually shows the 21 markets that Opendoor currently operates in, and you can see that a lot of the biggest markets in the United States, like New York, New Jersey, things like that, aren't even being served by Opendoor currently. Now, this is just the United States. There's obviously multiple other countries in the world that this type of business model could work really well for. But the main thing here, and as they call out in the title, is this company is just scratching the surface and just beginning to see that traction or that inflection point where their profits and revenues are going to absolutely explode. So we talked briefly in the previous slides about kind of that mental shift or digital transformation in this space. Now, if you look at some of the other industries, so things like retail, for example, people only spend about 14% of their money online. And if you think about how many people talk about Amazon or use Amazon, it's kind of astonishing that 86% of shopping is still done traditional brick and mortar. If we talk about transportation, you can see only 4% of that is booked or purchased online, and then used car sales represents 1%. So real estate is actually kind of behind a lot of these other industries in terms of adoption and digital transformation, and I think that really is because of the size and value of these transactions. People are really hesitant to take this kind of service online, but I do see that changing in the near future as people become more comfortable with online or e-commerce in general, and again, through word of mouth and satisfied customer transactions. The other thing to note on this slide is Opendoor is actually recognized as the market leader in this space. So if you look at some of the other names like Amazon, Uber, which funny enough, a lot of the leaders from this team actually came from these companies, you can see that these are very well-known national brands. Carvana is just kind of starting out, but I've seen a lot of commercials for them as well. So the fact that Opendoor is in this category of market leaders is phenomenal. So we've talked about the high-level numbers of this company or the financials overall, but this slide actually breaks it out on a per home basis in terms of contribution margin. So they do it for the entire company and then they do it for the Phoenix market as well. But you can see here, out of a 7.3% gross margin, they pay about 2.6% in actual selling costs, just over 0.5% in holding costs, and they actually end up making about $11,000 per home. Now, if you take out interest, because obviously this company has to borrow money in order to finance these home purchases, they're actually making about $8,000 a home in the Phoenix market and $5,000 per home overall in all 21 markets that they serve. So you can see here between $5,000 and $8,000 per unit. If you start selling 10, 20, 50, 100,000 units a year, the numbers quickly add up. in this type of a business model. The other thing I'm so excited about with Opendoor is actually the value add or high margin services that they've already implemented or that they're planning to launch in the near future here. So in addition to the core 5% commission, they're actually looking to launch a number of other value add or high margin services. So this includes title services, home loans, and they're also looking to get into the home warranty, remodeling, insurance, moving, those type of industries, which just further compounds the profitability of this company. So you can see on the left here, this is an example of their title services. They've been around for 9 quarters now, and you can see the growth rate going from 103 transactions all the way up to 8,100. So this shows their ability to launch or step into new spaces and quickly gain market share and understand the issues or the needs of the consumer. So the final thing I wanted to mention about Opendoor itself before we get into some of the competitors is actually a public offering that they've just recently launched and is scheduled to be completed in February here. This is expected to yield about $800 million of cash for the company, which is absolutely phenomenal as they start to break into these new markets and launch new services. You can never have too much cash as a startup, and I think this is a strong statement for the company to ensure that they have the flexibility and the stability to execute on some of these plans. So to close the video off, I did want to talk about some of the competitors in this industry. Now, there are really 6 that I've been able to identify. I'll go through them quickly and then we'll talk about some of the differences between Opendoor and the competitors. So first up is Zillow. We then have OfferPad, Redfin, which is one of the more popular ones, Orchard, and We Buy Ugly Houses. I'm not sure who named this company, but honestly, I'm not a big fan of that one. Now, if we look at the actual differences, you can read through these in more detail, but generally what the differences are is Opendoor offers quicker turnaround in terms of offers. They operate in more markets and they don't require an in-home inspection. So you can see here, for example, compared to Zillow, Opendoor provides a free offer within 24 hours, whereas Zillow takes 3 days. In terms of OfferPad, OfferPad only operates in 14 areas. So compared to Redfin, they actually require an in-home visit before you get an offer. Opendoor also closes within 14 days, whereas Redfin can take up to 30. Orchard only operates in 5 areas, and We Buy Ugly Houses takes up to 30 days to close a deal. So you can see between the 6 here, I think Opendoor offers the best kind of overall experience for the customer. They give cash offers up front without any required in-home inspection. It's quicker than any of the other competitors, and they offer their service in more markets. So especially for people who are planning to move between states, this is a real value add as you can deal with one company for both the sale and purchase of your future home. So for these reasons, I think Opendoor definitely stands out above the rest. That's why they are considered the market leader in this space. And I think with that additional cash injection, they're now poised to expand to even more markets at an even faster pace, which will further separate them from the pack here. Now, as we talked about on the TAM slide, I think ultimately this market has enough opportunity and space for many competitors. But I personally think Opendoor is going to take the lead here quickly, and it's going to stand out like an Amazon or an Uber in their respective field. So for those reasons, I'm extremely bullish on this company. I think the current price of $30 or $31 a share is extremely reasonable. And I could see this one growing exponentially over the next 5, 10, 15 years as digital real estate sales become the norm rather than the exception. That's it for today's video, guys. I hope you enjoyed. I hope this opened your eyes to maybe a new opportunity in this type of industry. Please make sure you like and subscribe if you haven't already to the channel, and have a great rest of your day.